Hi, we are Mystery Inc. My name is Daniel Lee. We have Shirley Aragon, Liying Deng, and Margaret Jose, Loris Khajehkian, and Maria Quintero. To start us off, giving us a brief introduction on our company. Mystery Inc. is a global company started up by 6 business-minded students from the prestigious grounds of California State University of Los Angeles. This company's identity is to provide top quality products by integrating fantastic customer service and affordable technology. The primary goals of the company are to increase and maintain the primary lead in market share, to raise the stock price every year, and to increase our return on equity every quarter. We have our main production plants located in 2 separate locations, the first being in America and the other located overseas in Pandau. Next, I'll be going in more depth of our organizational chart. We have the CEO of Mystery Inc., her name is Maria Quintero, and Margaret Jose was our VP of Operations. We had Loris Khajehkian was our Vice President in Sales, Liying Deng, who was our VP in Finance, Shirley Aragon, who was given responsibilities as Controller, and I myself, Daniel, who led the Marketing Department. Next, I'm going to go ahead and pass it off to Loris, and he'll go more in depth of our analysis.
I'm going to present our performance targets for year 5 and 6 by looking at our target results from our 2-year forecast and compare it to our actual results for years 5 and 6. I will be going over return on assets, return on equity, market share, stock price, and unit production costs and total net income. Our target for ROA was 2% and our actual was 4% in year 5. We expected the ROA to increase mostly due to our production expanding to our Pandau plant. We had a total of 10 lines, 8 in America and 2 in Pandau. For year 6, our target for return on assets was 4%, but the actual was 8%. For return on equity, our target was 5%, and our actual was 5.48%. In year 5, for year 6, our target for return on equity was 8%, and our actual was 11.31%. We were able to increase our ROE in years 5 to 6 by having higher earnings than our projected sales. For market share, our target in year 5 was 20%, and our actual was 19.05%. For year 6, our target market share was also 20%, and our actual was 18.32%. Even though we had multiple stockouts, our market share remained high because we sold our product for competitive prices, even though our product was of superior quality. For year 5, our target on stock price was 1.47 per share, and our actual was 1.24 per share. For year 6, our target on stock price was 1.63 per share, and our actual was 1.38. Our stock price was relatively low because of our poor financial performance. Our target for unit production cost was $6.5 in year 5, and our actual was 6.38 for year 6. Our target for unit production cost was 7.1, and our actual was 6.49. Our unit production costs were relatively high because of producing a high-quality product with the best quality and features available. Our target for total net income in year 5 was $400,000, and our actual was $738,000. For year 6, our target was $700,000, and our actual was $1.6 million. We were able to increase our net income by much more than anticipated, and we'll be now talking about the analysis of functional strategies.
We started with low prices and started increasing our products since we had a higher quality model, and we basically went according to our 2-year plan with the minimal variances in the number of salary levels and number of salespeople. For R&D, our decision for year 5 was at a steady rate. Since we planned to carry the new model for year 6, we then spent more for our R&D for year 6 and quarter 1 and 2. For training, our quarterly results were different from what was planned. Mystery Inc. increased productivity levels to make sure we were getting an efficient training. For advertising, we increased in year 5 and maintained a consistent advertising expense for the first 3 quarters in year 5. We realized that we have to focus more on advertising since this is one of the most important aspects in our business. In year 6, we increased more and it helped increase our sales greatly as we were utilizing all options to drive our sales up. For the number of salespeople in year 5, we actually didn't go according to what was planned because we didn't have many sales than we were expecting. The salary Mystery Inc. offers for year 5 is more than the base salary of $3,000. Because we want to reward our salespeople for their hard work, we raised their salary for $3,000 350 and kept raising for year 6 as well. Since Mystery Inc. is growing for year 6, we decided to increase the salary levels and the commission rates for our sales team. So basically, not everything went according to plan, and while we had to make adjustments for both salary and commission rates. Though we planned to execute the same number for salespeople according to what was planned with a very minimal change, we realized that we had the most sales in Area 1, which is the America 1. We hired more in America 1 to help us get better and higher. The reason why we decided to increase commission rates in all 4 regions is for them to generate more sales via incentives for our sales force. There were no adjustments made as our current compensations was enough to keep our sales team satisfied and happy. Based on our sales forecast, there were fewer products produced than our actual results to fulfill sales orders. Mystery Inc. actually shipped out products frequently to sales offices rather than to customers. This meant that we had more products produced than the actual demand from our customers. We were producing more than what we were supposed to. The transportation expense for year 5 was more than what was projected. This was mainly because of the cost of transporting goods to our overseas area. The foreign exchange rate was a huge factor in our production cost. Fortunately, we decided to open a plant overseas in year 6, and that helped us a lot to save for our transportation costs. We really had a high production cost, so the strategy not to open a plant overseas at the early year actually made our production cost even higher. Despite the underestimated result for our domestic production output and overestimated production output in Pandao, Mystery Inc. was successfully in its production cost. Liying will be talking about the financial statement for our company.
So for the income statement, if we compare to the 2-year plan, we actually had higher total units sold in year 6. We had increased our selling prices in all areas more and earlier than we had expected. As the result, we had higher total sales revenues during year 6. And more units have been sold in all domestic areas except Pandao, and the higher sales volume brought us the higher cost of goods sold. And the value-added tax is calculated based on the sales revenue at the rate of 10%, since we had higher selling prices but lower sales volumes in Pandao, so we incurred less value-added tax compared to the 2-year plan. And the significant higher sales volume and selling prices offset unfavorable expense variance and resulted in a high favorable variance to operating income for the year 6. For the bond interest expense, we expected the interest rate for our firm to be 9.60% during the year 5. While we reissued the bond, the interest rate were actually 9.10% and 8.90%. Also, we repurchased totally 1 million of the bonds during the 1st and 3rd quarter in year 6. And since we had more sales volume than the projection, we enjoyed more profits than we had expected, and we would have to pay more income tax for the profits. For the balance sheets, we actually had more credit sales because the higher sales volume, and we had higher AR. And we actually sold more than we had expected, and we had lower ending inventory. And the actual production costs were lower than those we had expected, and the actual units output varied significantly during year 6. As we had mentioned above, we had incurred more income tax because of the higher sales due to the higher sales volume and the selling prices. Since we had sufficient cash on hand and the purpose of saving interest expense, we repurchased 1 million of the bonds during the year 6. As we had more net earnings, we had not paid out significant amount of dividends. We had incurred favorable variance in accumulated earnings. And finally, we had expected the Pandao currency would grow significantly weaker relative to American dollar during the year 6. However, although the Pandao currency had gradually become weaker related to dollar, we overestimated its weaknesses. Therefore, we had a favorable variance in accumulated foreign currency adjustments. And next, Maria is going to talk about the SWOT analysis.
Okay, so the SWOT analysis, the first thing I'll be covering is the strength. One of the strengths Mystery Inc. has is the salaries. Employees were always given increases in salaries to prevent resignations. We always met the standard of living conditions to our employees wherever they lived. Our terminations were ever done by Mr. Inc. Another strength was training. Mr. Inc. invested highly on training for our employees. We felt that we needed to invest highly on investments since we did produce a high quality product. Another of our strengths was the unit production cost. Beginning, our cost projection was in the lead. Gradually it fell, but had to keep up our standards high. Our unit production cost was high since our quality consisted of it. Lastly, is profit. Mr. Inc. always managed to make profit. We never borrowed money or declared bankruptcy. The next thing I'll be talking about is the weaknesses. One of our weaknesses was production costs. We did have high production costs. We focused more on quality than quantity. Another of our weaknesses was sales. We had more net losses instead of net incomes. Another of our weaknesses was accumulated earnings. Mr. Inc. had low accumulated earnings, especially with Pandao, where we were even on the negatives. Another of our weaknesses was inventory. We did run short on inventory. We consider a mistake. It was selling our high quality product for too low of a price. Another of our weaknesses was employees. We had a couple of employees resign. Another weakness was our plant. We should have focused more in the plant in Pandao since we did spend too much on shipping costs. Lastly, one of the weaknesses we had was also product. We sold less based on quality, not quantity. The next thing I'll be talking about is the opportunities. We did have capital stock. In the beginning, Mr. Inc. did not offer stock until later along the years. However, we did give the opportunity to offer it in the last couple of years. We also had as an opportunity our GDP. It did increase over the years. That gave the company good opportunity for growth. Lastly, the market share. The market share was never our strong suit. For the last quarter, we were standing in the last place with having only 17.6 compared to the highest competitor with 22.8 for year 6, quarter 4, mainly due to the competitors following. Next, I'll be talking about now I'll be talking about the threats. The threats for Mr. Inc. One of them is price. High price competitors offering lower price for same quality. Another one is entrance to Pandao, loss of control over seat, and being more competitive. Another of the threats is consumer preferences. Consumer preferences can change at any time. They can shift every directions. Another threat is economic conditions, which could be a financial turmoil, defects on a product, and even weather conditions. Lastly, we have competitors outdoing overall strategy. Other competitor strategies can be more efficient than Mr. Inc. Competitors can have better marketing or advertising that attracts more consumers than Mr. Inc. I'll be talking about the 7-year projection. First, we have the projection expansion in Pandao and decrease the lines for America. Next, we have the downgrade our quality of product to make more profit. Another one is lower price to raise sales. Another one is increase in our advertisement. Another one is with this increase of forecasting demand, we will be required to add 4 additional lines in Pandao. In the meantime, the company will have to rely on overtime and second shift if necessary due to high demand. We also have the increase in personnel projection. There's also the increase in training expense to approximately about $250,000 more. We also have cheaper unit production costs. And lastly, as for the dividends paid out to the shareholders, we will continue to be giving out 5% of our prior net income as part of the dividends. Next, we have Daniel Lee. He will now be talking about the lessons learned.
Oh, you scared me.
Oh, it's completely messed. Time management. In the business world, time is one of the most important assets for any organization. In business, one can control its losses but can never control the flow of valuable time.
Mr. Inc. has different approaches when making decisions regarding production, marketing, and staff. These 3 components are all connected by the financial well-being of the company. In order to efficiently and effectively distribute the necessary funds to each department, we use the tools at our disposal. Our decision-making process for production begins with forecast future demand. This is done by running various regression models that weigh in factors like gross domestic product of the target location, the consumer price index in the market, and through consumer reports. We find out which models are in high demand within each segment. After the weighting factors just mentioned are input, we make sure we have enough inventory on hand so that we don't risk the chance of running out of product. Fluctuations in demand can occur at any time and for unknown reasons. Stockouts should never happen and can have a negative impact on production forthcoming quarters. The next decision we make is in regards to staffing and marketing. Our focus is to even out our allocated resources and not focus too much on one that we overlook the other. We review consumer reports each quarter to ensure Mystery Inc. is producing products that are in high demand and pricing them competitively and compared to other companies and at a price that consumers are willing to pay. With production in all different areas, we refrain from giving our employees overtime. We disperse enough funds into training to make sure employees are trained and can maximize production and run an efficient business. Our forecasting helps us foretell when we will need to hire and train more due to expected high demand so we can meet our production quotas without having to pay for overtime labor. Mystery Inc.'s accountant created a spreadsheet that forecasts the results of the recommendations of the other components. The spreadsheet weighs in factors consistent with total production costs, which include items such as general and selling expenses, cost of goods sold, advertising, and training. It helps create a pro forma income statement for the following quarter. Mr. Inc. has had success in using the spreadsheet and will continue to use it down the line. The decision-making process relied heavily on the results and the degree of accuracy of the spreadsheet. Each decision regarding investments into the plant or hiring or firing of an employee had certain costs associated with it. These costs were weighed against opportunity costs of foregone investments and the potential of losses. We would weigh the benefits of investing money versus paying out cash dividends. All decisions are made by the entire group and have the company's best interests at heart. Our CEO was an essential part to our strategy. Her knowledge of all the components and acquired skills helped her integrate everyone's ideas in all our decisions. She did a great job of keeping everyone on track and guiding everyone's decision so as to not focus on one portion alone. Her role was also essential in making our decisions undisputed. As much as our decision-making process worked, in some instances it did not. There were times where we felt like our forecast was inaccurate and we went ahead and made our own decisions only to realize that we should have stuck to the forecast. Of course, we learned from our mistakes. Setbacks in anticipated net income caused us to deactivate lines, which led us to expand overseas. Stockouts also pushed us into expanding overseas and panned out. Although our decision-making process wasn't flawless, it was effective.
Thank you for listening.